Hey, welcome back to The Dive. Today on the show, we're talking with Gareth Soloway from InTheMoneyStocks.com. He's going to share his thoughts on the October jobs report, the Fed's possible next move, the global oil market, Meta, Apple, Twitter, gold, and of course, Bitcoin. But before we bring him on, do me one quick favor and go ahead and smash that subscribe button below me there so we can keep making you these videos. Hey, Gareth, welcome back to The Dive.
Hi there. It's great to be back. Thank you for having me.
Now, Gareth, the US economy added 261,000 jobs in October, and the unemployment rate rose to 3.7%. Based on the recent job numbers, do you think that the labor market remains strong despite growing fears by many economists that a recession looms?
So I do think that the headline number was better than expected. I think the market had anticipated 205,000, came in at 263. But the key is if you looked at the underbelly, the unemployment rate rose. We also had some other signals within the report that showed a little bit of weakening. And that's, I think, why we saw the dollar decline on Friday. And really what we saw was the market saying, okay, the Fed may be able to take the foot off the gas pedal at this point. And again, I think it's important to recognize that the Fed will likely hike in December, but for me, it's a question of, are they going to do 50 basis points or 25? I think if the CPI data this week comes in kind of, weaker, meaning that less inflation, you'll be only looking at a 25 point increase in the Fed funds rate.
Do you think that the Fed is on the right track, or is this a policy error?
I've been in the camp that it's a policy error, and again, part of that is the history of the Fed. The Fed, again, go back to 2008, and they were way behind the curve before they started coming in and kind of stimulating. We saw Lehman Brothers fail. Then you go to COVID, and yes, they needed to do something at the beginning of COVID, but then they kept the printing presses going for far too long. And in my opinion, what they're doing here is they're kind of overreacting, right? They're always one step behind, and then they feel like they have to do more to kind of play catch up. And the problem with that is that when they play catch up, they overdo it, right? They overcompensate. And so I think what they're doing right now is overcompensating. And I think we're going to see a very sharp slowdown in 2023, maybe around mid 2023 in the economy. And that's going to be some very rough times for the stock market, as well as individual investors and citizens.
The G7 nations and Australia have agreed to set a fixed price when they finalize a price cap on Russian oil later this month, rather than adopting a floating rate. What is your read on the global oil market?
Yeah, I continue to be bearish on the global oil market. We were at 130, we were at 120. Everyone said it was going to 200. But what we have to remember is that even if there was oil taken off the market, and by the way, it turned out that Russia just sold it at a discount to China anyways, so it wasn't like any oil came off the market. But let's say OPEC does follow through on their cuts. The cuts are only a drop in the bucket to the demand destruction that a slowing global economy is having. So we have to remember that, and that's one of the reasons why I was bearish at 130 and 120 on oil, and I continue to be bearish here on the charts. And I do think that we have in 2023, if I'm right about the slowdown in the US, where we're going to see a pretty dramatic slowdown, I think oil could be back to $50 a barrel by mid 2023. So I am bearish on oil, and I continue to think that regardless of who's setting price where, it's still going to be too much oil out there for a global slowing economy.
Let's talk a bit about the tech sector. Meta is getting a lot of hate and backlash recently due to the fact that they spend too much money on the metaverse. What is your read on Meta right now, and do you think that this is a good buy?
Yeah, so I actually do, and I can flip over to the charts here and we can take a look. But so I'm a big fan of finding stocks that everyone else hates that overall are good quality companies, and right now Meta is the case of that. I mean, that is the picture on the refrigerator, whatever you want to call it, for the stock that is the most hated, which means people are net majorly bearish. They've dumped it. And really what that means is that everyone that wanted to sell has now sold, and that leaves the door open to a positive surprise. So it's not even like much has to happen. For instance, today, Meta's up almost 5% just because they're going to be cutting some jobs, which is cost saving. Now, again, I do think Zuckerberg, people are a little nervous about his control of the company and the amount of money he spends on the metaverse. But I also think that he's, in a weird way, seeing the future, right? We know that social media is going to slow down, whether it's a recession with advertising profits or it's just people getting sick of being on social media. You're going to see a slowdown there, and he's looking for that next big thing. And I think he sees that vision. Most investors, though, remember, they're not into what's going to happen in 10 years. They want instant gratification, instant profit. So I actually think either way, the valuation here makes a lot of sense. It opens the door for a surprise, which could yield 20, 30, 40% upside in Meta stock from here.
Now, Apple's begun assembling the latest iPhone 14 model in India. How big of a story do you think this is?
Yeah, it's a very interesting one. And I think it goes to show you that Apple is being smart about China, right? So we know that the Foxconn plant in China does most of the assembly of the iPhones and everything like that. And I think what we're starting to see is companies diversifying away from China because of the political risks there, right? We know that Xi has full control. He showed it again recently when he was reappointed as the head of China. And so companies are nervous. I mean, one thing happens between the US and China, and we don't know what the repercussions could be for these companies that do mass produce stuff in China. So I think that's exactly what this is. It's saying, okay, we need to have other places in the world where we manufacture the iPhone. And I think that's why they're going to India right now.
So Gareth, we follow you on Twitter and we see that you are verified. Do you think paying $8 per month to keep your verified account makes sense? And what are your thoughts on Twitter being private?
Yeah, so I mean, Twitter being private, I hope it's still run in a good manner. I would think that Elon Musk has a history of running companies in a good manner, so I hope it continues that way. In general, he is viewed as a visionary, so you got to give him the benefit of the doubt until proven otherwise. In terms of paying $8, for me that's an inconsequential amount, but I do hope that the $8 goes to verification, meaning that I was hearing some crazy stuff, how people were getting the check mark, paying $8, then changing their name to Elon Musk, and then putting out content, and it looks like it's actually coming from him. So if it's just paying $8 and then all of a sudden you magically get a check mark, to me, that makes no sense. In fact, it's going to cheapen the brand of Twitter because you're going to have people that aren't the real people becoming verified as the real people. So I do think they have to figure this out. To me, the $8, again, if it goes to the right thing, if it helps create a safer environment with less bots on Twitter, I think it's definitely fine with me.
LME copper jumped as much as 5.7%, its biggest gain since March 2020. What are your thoughts on copper's recent price action?
Yeah, for sure. So copper, it's interesting because the question with copper is, are we seeing a kind of a relaxed, more standard approach to COVID lockdowns in China? So I think the move up we saw on Friday, and I know copper's pulling back a little bit today because the Chinese government said, no, we're not going to really relax the policies on COVID lockdowns. But I think that, again, that's where that's coming from. So it was a nice move. The one thing I would just say on the copper chart, and I'm going to show my chart here real quick so we can get our bearings on it. The overall path of copper is bearish right now. And again, just to show you guys what I mean by that is that you can connect these lows here, and then basically you can connect a parallel here. So you might have short-term upside to the upper range, but this is a down move with an inside bar action, which is a bearish flag pattern. And what that tells me on a technical basis is that, basically copper is going to have another leg lower. So I think we have to be careful here. And it kind of makes sense if you think about it logically. If China relaxes their COVID policy, that's short-term bullish for copper. But if we see the rate hikes in the US continuing to hurt the economy and the global economy, then it makes sense that the demand for silver would start to drop again, maybe in 2023. So I think that, again, for the most part, it was an amazing pop, kind of a relief pop, but I would expect copper to head back down maybe in early 2023.
Okay, now we're in the last quarter of 2022. How do you feel about gold right now?
I continue to be really excited about gold. I think it's a pure play where you take out the risk of Bitcoin. And again, I'm a long-term huge bull on Bitcoin, but I also think that Bitcoin is still a maturing asset. We still need to know the regulations from Gary Gensler at the SEC. So there's a lot of unknowns there, but gold continues to be the purest play for fear a weaker dollar, which I do think eventually the Fed is forced to go back to printing money or at least lower interest rates. And so I do think if you compare the gold action from the 1970s when inflation was as high as it is now, it's consolidating just like it did in the mid 70s before a major up move. So I continue to be a really big bull in gold.
Gareth, we can't let you go without talking about Bitcoin. We all know that you've made some spot on calls in the past year. Are we going to see its all-time highs near term?
No, not in the near term. I think Bitcoin is going through what's going to be an extended bear market, kind of like the dot-coms did after the dot-com collapse. So there's so many things that are very similar to the dot-coms. And what we know is the NASDAQ actually took almost 15 years to make new all-time highs. Now, I don't think it'll take even near that long for Bitcoin to make new all-time highs, but I think the bear cycle will be longer. The reason why the bear cycle could likely be longer is that the Fed is not printing money right now. So we know that in the past bear cycles in Bitcoin, the Fed was always printing. There was always quantitative easing. Interest rates were generally going lower and lower and lower, and that helped bring Bitcoin out of a bear market. I think here we're going to have the Fed, which eventually way down the line will start printing again, but they're going to be very hesitant because they've been burned by inflation now, inflation spiking. So I think we could be in for a couple more years of sideways, choppy action. And then I do think maybe after 2025, we could see that next bull run. Maybe by the late 2020s, you could see new all-time highs, 100,000, maybe even more.
Okay, great. Well, thank you so much for coming on. That's all we have for you today, and we'll see you next time, Gareth.
Thank you, Cassandra. Appreciate it. Thank you so much.
Thanks so much for watching today. We'll be back again tomorrow, and you're not going to want to miss it. So be sure to stay tuned by hitting that notification bell before you leave us. Bye.